The Earth's temperature has warmed by more than 1 degree Celsius since pre-industrial times. Based on the current trajectory, we face catastrophic warming of over 3 degrees Celsius by 2100. The last time the planet was that warm was the prehistoric Pliocene era, 3 million years ago. In 2015, the UN Paris Agreement set goals to keep warming to well below 2 degrees, with the aim of limiting the rise to 1.5 degrees to avoid climate breakdown. To have a 50% chance of meeting the key UN target of 1.5 degrees, nations must limit global CO2 emissions to under 500 gigatons by the end of the century. At current rates, we'll blow the emissions budget of 1.5 degrees in just 11 and a half years. But global reserves of oil, coal and gas exceed the level that can be burned under Paris many times over. Carbon Tracker's research shows that the largest listed oil and gas companies must cut production by over a third by 2040 to meet the Paris goals, or risk investors' money on uneconomic assets that may be stranded. Technological advances and falling renewables costs won't be enough to meet the 1.5 degree Paris target. Countries will need to step up action. Paris allows for nations to ratchet up climate rules every 5 years. With commitments off track and time running out, governments will be pushed to act forcefully. A tougher policy response is expected to come by 2025 as lawmakers scramble to contain the climate crisis. Confronted by this paradigm shift, today's investors face a stark choice: continue with business as usual and risk trillions and a climate crisis, or invest in the energy revolution. How will investors fare in the face of the disruption caused by rapid climate change? We can no longer bet on a fossil fuel future. Our analysts found that almost half of the world's coal plants already run at a loss. According to the UN, 80% of global coal plant electricity must close by 2030 to limit warming to 1.5 degrees. Solar and wind technologies are increasingly cheaper and more efficient, fueling demand. Carbon Tracker's analysis shows that future energy supply growth will all come from renewables, overtaking fossil fuels, which are expected to peak in the 2020s. If big oil and gas companies fail to align with climate goals, they risk wasting trillions on unneeded and worthless assets. A low-carbon strategy requires $2.2 trillion less in upstream development by 2030 versus business as usual. Emerging markets will leapfrog to using renewables, providing investors with vast growth opportunities. Investor action through company engagement initiatives like Climate Action 100+, managing $40 trillion, is putting pressure on big emitters to wind down. Meanwhile, the growing divestment movement, managing over $11 trillion in assets, threatens to dump fossil fuels for good, adding yet more pressure. In a rapidly warming world, more extreme weather events will lead to instability, fueling global protest movements and even tougher national climate policies that in turn drive change, ringing the death knell for coal and slashing oil and gas use. Business as usual is no longer an option. Only those who invest in line with the energy revolution can avoid big losses and secure an orderly transition to a low-carbon future.